Hey everyone, welcome back to Nadlin Forum Podcast Daily. I'm Ruby Sturt, calling in from sunny Melbourne, and I've got Lior with me as always. Today we're talking about something that's confused a few people, why mortgage rates just stayed put this week when it felt like, maybe they were about to go up again.
Yeah, hi Ruby. Hi everyone. It's funny, after all those tiny jumps lately, people expect drama with every new inflation number. But the story this week is actually pretty chill, and it's all down to the producer price index, or PPI, coming in soft, like lower than what anybody was predicting.
Right, and for folks who might not be glued to the data at 7 a.m., the PPI is kind of like the price tag on goods before they even hit the store shelves. If it hikes up, everyone gets nervous about costs down the supply chain, right? But this time, it turned out much gentler than expected, which had bond markets sighing in relief.
Exactly. So you see, before that report came out, Treasury bonds were a bit shaky, looking like borrowing costs might tick up. But when the PPI landed, it calmed things down. It's interesting. Mortgage rates aren't published in real time. Lenders wait a few hours into trading to see how the numbers hit. So this week, when the PPI settled everyone down, the rates reflected that mellow vibe.
Yeah, and I always find it wild how sometimes these small surprises in the data can ripple through like big ocean waves. You blink, and all of a sudden, the rate you were watching yesterday is a whole different story by lunchtime.
That's for sure. I actually remember during the 2008 crisis, just a little shift in the morning news would send the lenders scrambling. Same kind of butterfly effect, even if this week was way, way less dramatic. But it's that sensitivity to early signals that can make all the difference for people waiting to lock a rate or pull the trigger on a house.
So let's just pose the big question for today. How do these tiny changes, 0.1% here or there, wind up making such a huge impact? It's kind of like watching dominoes, honestly. Lior, I bet you've watched more market dominoes fall than most of us even see in our lifetimes.
Yeah, no, I've seen everything from total market panic to the weirdest calm in the middle of chaos. So, backing up, PPI isn't the only number out there. You've got CPI, the Consumer Price Index, which is usually the big one everyone watches for mortgage rates. PPI matters, but not as much. Still, like this week showed, it can push things when it moves unexpectedly.
Totally. I think the confusion comes when people just see index flashing across headlines and assume it all means the same thing. But CPI is basically what we pay as consumers: rent, groceries, all the fun stuff. PPI is more about businesses and their costs before stuff hits the shelves, right?
Exactly. But just cause PPI doesn't usually grab the spotlight doesn't mean it's harmless. Like in May last year, remember? There was 1 week where the PPI spiked out of nowhere and lenders scrambled. Rates jumped before folks had even finished their coffee. Sometimes the market just reacts before anyone really takes in what the number means.
So what I'm hearing is maybe everyone should just wake up, check like 12 economic indexes before breakfast, and then decide if they're ready to buy a home. I mean, do we all need to become part-time economists now just to get a decent mortgage?
I mean, honestly, it helps. Or, listen to us so you don't have to read all the boring parts. But seriously, buyers and even homeowners looking to refinance, if you pay attention on days when these reports drop, it can make a pretty big difference.
It's like being on a game show where the right answer changes every morning. But hey, at least you don't have to wear a suit to play along, right? So let's dig into why this steadiness actually matters. Because with rates not budging much, there's a little window where folks can refinance or lock in a decent loan. Maybe next week, things are totally different again.
Yeah, that's key. When the market's calm like this, it can be a great time to make your move. Nobody likes chasing rates up a ladder. I always tell clients you want to grab the opportunity when everyone else is waiting for the big drop that may never come.
Love that. It's like catching a tram. If you wait, another might come, or you might just be standing in the rain. I actually had a mate this week. She'd been watching rates for months, all nervous, right? Good PPI news comes in. She calls her lender, locks her rate probably 15 minutes later. By the end of the day, everyone's calling her a genius.
That's such a classic. And it's true. Timing really is everything, especially in weirdly steady markets, because a new inflation report, or anything really, could change things in a blink. We've got more major inflation data out soon that could send rates either way. Nobody can predict it perfectly.
So that's your little nugget for today. Steady can be golden, but don't fall asleep at the wheel. Next week, we'll probably be chatting about how the latest report threw everyone for a loop. Again. Lior, this was fun. Thanks as always for nerding out with me about all the numbers.
Thank you, Ruby. Always great. Thanks, listeners, for joining us. Make sure you subscribe and we'll catch you next time. Bye, Ruby.
Bye, Lior. Take care, everyone, and happy rate watching.